Hello everybody, this will be a very basic tutorial on candlesticks, specifically the Japanese candlesticks. I turned off my basics on the chart and just put on green and red candlesticks along with volume. If you guys learned something new from this video, please give me a thumbs up and subscribe. I will be making more basic videos like this in a playlist called Trading Basics, and so this video will be added in there. Just the basic starting off, a green candle typically stands for when price is increasing, and a red candle, it stands for a candle that kind of stands for a price decreasing at the time. And so like the four basic parts I want you to know and understand just to reading candlesticks is the body and the wick and the open and the close. This can actually give you a lot of info based on the candle or what's happening with price action. And so I'll take a look at this candle right here, this green candle. And so as you can see right here, the solid part of the candle is called the body of the candle. And then up here you have wicks, kind of like a candle wick. So there's a high wick and a low wick. So the very high of the wick tells you the high during that time period. Right now we're on the 4-hour time frame, so this is all price action, all kind of combined into one portion. And so it gives you the high of the candle. And if you hover over this in TradingView, just put your mouse over it, and then you can read the H on the top of the screen, and it stands for high, and that will be the very top of the candle wick. And so we get a value of 60,829 based off of this reading. Likewise, on the bottom of the wick, or the very bottom of the candle right here, we get a low reading, and here you can read this based off of TradingView itself, where we get the L and we get a low of 60,125. Remember, this is still all on the basic 4-hour timeline. So it represents 4 hours of price action within that time period. The next thing I want you guys to know is typically when price is in a green candle, price will open in that and start with the building the candle at the bottom of the candle, the bottom of the body in a green candle, only in a green candle. So this is the low, and so this will be also called the open according to TradingView. And so you can just read this in the top toolbar again, the O, and so we get a reading of 60,383. Likewise, to the contrary, we get the close of the candle, and this is only in green candles. And this is the top of the body. This is represented by C, and according to TradingView, and you can read that. And the value for this candle is 60,704.65 cents. So you can read that in TradingView. It'll give you nice info based off of it. Next, we'll look at a bearish candle example. And so we're just going to go on to the next candle over and just look at this candle, this red candle right here. Again, bearish candles are represented by red, bullish candles are represented by green. And so in this case, like the bullish candle or any other candle really, we get the body, which is the filled in part, and then we have the wicks of the high and the low. Again, it's kind of the same thing, except for the open and close are flip-flopped compared to that previous green candle that we talked about. And so the open will actually be on top of the candle body. And so you can read this in TradingView by going to the O, and you'll see a value of 60,847. Opposite to the contrary, you get the candle close on the red candle. And you'll see that by the C value, and we get a value of 60,383. And so when price closes lower than the opening, it gives it a red candle. The next basic thing to know about candlesticks is that when typically a candle has really no wicks to it and just you see a full body on it, it represents a upward momentum. In this case, for green candles, it represents a strong momentum in either that direction. And so you can see right here, we just kind of have a body and really no wicks to the candle. Therefore, there's a lot of upward bullish momentum to it. So on the contrary, when price is on a red candle and it really has no wicks, it stands for a strong downward momentum movement. And so you can see a good example right here where it really has no wicks to it and it's just a full body candle representing strong momentum to the downside. And indeed, we did come down pretty strong after that candle. And so I'm going to give you some basic patterns to kind of understand and how to read the trend with candlesticks. One example is looking at this candlestick, this green candlestick right here. And whenever we have kind of a large wick of the candle like so, followed by a small green body of the candle, and I can't really draw around that, but it represents that the bulls or buyers try to push the price up, but it instantly got rejected down by bears. Therefore, price will tend to push down in the seller direction. And as you can see here, we did start kind of getting dumped down after that movement. The next major candle stick pattern that I tend to look for is a hammer, and it looks just like a hammer basically, where we have a longer wick on the downtrend followed by a upper body that is really has no wick on top of it, and it kind of has a smaller body compared to the overall size of the candle. And so something to trade with this is that you can look and use volume. And if you see a large green increase in volume, meaning a lot of buyers buying it over time, that's what volume really is. It's just basically how much is traded at that interval. And so we are on the 1 hour. And so you guys can see this. If you see this large volume and a hammer candle, you guys can enter on the next candle. And so you entered on this one, and here you could have gotten a pretty good move, really good move actually, ending up in the long term. The next and last one I tend to look for is called a doji, and a doji is really a candle where there's large wicks and a small body really clumped together. And so a good example is right here. And how you can trade dojis is basically it confirms a reversal in the trend. And so right here, you can see we were having a basic uptrend, and then we kind of started to come down a little bit. The doji confirmed, and we continued downward from that trend. What you guys can do is see once this doji confirmed, you can enter on the next trend or the next candle open, and just put your stop loss up above the previous candle and just ride the trend down. And so that is pretty much it for the video. Please give me a thumbs up and subscribe if you guys learned something new from this video. Plus, I'll leave a link to a Discord, free Discord in the description where I post all my trades along with other crypto related ideas, along with other traders trading. Thanks. Bye.